problem 21A comes in three parts. And for those of you who have lived your entire life just waiting for the day when you could go through the entire accounting cycle, today's your lucky day. For the rest of you, I think we'll refer to you as normal, not so much. So, first thing we're going to do is we're going to go through the general journal. The book gives us a list of transactions, and we're going to remember our mnemonic device, DED, debits for expenses, assets, and dividends. Debits make expenses go up, assets go up, dividends go up, and if they go up with a debit, they go down with a credit. So, I left the first one there. The owner, in this case, invested $106,000, $80,000 in cash, $26,000 in office equipment. That's a common way for someone to start a business. Now, these numbers here, they're really kind of useless. Those are the posting numbers. And in large companies, every chart of account is numbered. And that's what these are. The book asks you to put them in, and it will mark your homework incomplete without them. They don't mean anything. They simply have to be there to be marked correct. And in the real world, they're there so that the people who are doing this don't have to look up the account. They can just type in 307 and it takes them to the right account. That's what they're there for. Put them in. Don't worry about them. They're just another name for the account. So, on April 2nd, and you do need to put the date in, this guy bought some prepaid rent. Prepaid rent is an asset. So that's $9,000. And he paid cash. $9,000 credit. What we're filling out here is the general journal. This is the diary of the business. This tells you what the business did step by step, day by day. Then, on the 3rd, and I'm going to skip a line to make it a little easier, we bought some office equipment. We bought some office supplies. And we put them on our account payable. So the total was $11,600. $8,000 of that was for equipment, which will last longer than a year, and $3,600 was for supplies, which will be used up in the current period or current year. So, then on, I gotta keep moving this up so that we can, on the 6th, we earned some money. We did whatever it is we do. So that's service revenue. And that was $4,000. And our item of value, our asset, was accounts receivable. $4,000. Now, for a lot of students at your stage in accounting, accounts receivable and accounts payable are easy to confuse. Just say them correctly. Accounts payable, you're going to pay it. Accounts receivable, you're going to receive it. Okay? So let's see what happened on the 9th. We earned some more. Oh, wait a minute. I got those backwards. On the 6th, we actually received cash. On the 9th, we earned some more service revenue and got accounts receivable. So that was 6,000 and 6,000. Debit accounts receivable, the item of value, credit the revenue. Okay, now on the 13th, we're going to pay some bills. So our accounts payable, which goes up with a credit, goes down with a debit. So our accounts payable, we're paying $11,600, and we're paying it with cash, not garbage can lids. So our cash goes down $11,600. On the 19th, we buy some more prepaid, but this time it's prepaid insurance, and our prepaid insurance is $2,400. So that's the asset, that's the thing of value that increases with a debit, and we paid cash for it, so that decreases $2,400. Then on the 22nd, we collected some of our accounts receivable. So on the 22nd, we collected cash for $4,000. That's a debit. And our accounts receivable went down $4,000, or $4,400, I'm sorry. Went down, that's a credit. Now on the 25th, we earned some more revenue, but we didn't get paid. We got accounts receivable. So we have accounts receivable of $2,890, and we have revenue of $2,890. On the 28th, we're giving some money back to our owners. That's what a dividend means. Dividends fall into debit, expenses, assets, dividends. So $5,500 was our dividends, and we paid them in cash. There are other kinds of dividends, but that's for another day in another chapter. But right now they paid $5,500 cash to their owners. Then on the 29th, they bought some office supplies, and they put them on their account. They're going to pay for them later. That's a round to it. They're going to pay for it when they get round to it. And that was $600. And our last transaction for the month for the journal is on the 30th, when we got a utility bill. So it's utility expense $435, cash $435. Now, some of you are going to say, why isn't it a payable? A payable means we haven't paid it yet, but we did pay this. So that's our general journal, problem 21A, part 1.